So for the first time, the rate of growth of the Bitcoin supply is going to drop below the long-term rate of growth of gold. So long-term, the growth rate of the gold price, the gold supply, is about 1%. With this halving, Bitcoin's growth, the supply growth, is going to drop from 1.9% to 0.9%, below that of gold. Now here's another difference between gold and Bitcoin. When the price of gold soars, what happens? Miners crank up and the supply increases. That cannot accelerates, the supply growth accelerates. That cannot happen with Bitcoin. If, as the price has gone up, the supply growth is not changing at all. It's 1.9% at an annualized rate now. In April, it will drop to 0.9%. And the history is miner difficulty will increase. There will be some dislocations, perhaps, in the market, just as people understand how is this all going to play out, especially those new to this ecosystem, and then it usually takes off. It's usually very good for Bitcoin. By definition, the price for any commodity is determined at the margin. If at the margin supply growth is going to be cut in half for a commodity, that's huge. So gold, the value of gold in the marketplace today is $14 trillion. The value of Bitcoin in the world today is $1.4 trillion, 10% of gold. Digital gold is much more convenient than traditional gold, especially if you want it in cold storage, right?
For the first time in its history, Bitcoin's supply rate will drop below that of gold, officially making it much scarcer and much more valuable than gold itself. Whilst the growth rate of the gold supply is around 1%, Bitcoin's supply growth rate is expected to decrease from 1.9% to 0.9% after the halving event on April 17. This means we now have under 4 weeks to load up on more Bitcoin before its inevitable supply cut. In her most recent interview, ARK Invest CEO Cathie Wood explains why Bitcoin is bound to surpass gold and why it is arguably the best asset to own in 2024 and beyond. Make sure to stick around to the end of the video where Cathie explains why everyone should invest in Bitcoin, especially during economic crises. Also guys, if you want to stay most up to date on the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email, and join over 50,000 others to become a better crypto investor right now. Now here's Cathie Wood as she discusses why everyone needs to hold Bitcoin.
I actually think there's more of the NASDAQ that's going to be disrupted and that will suffer through creative destruction than people understand. They know they have to be in stocks, they have to diversify, they have too much cash, so let me play it safe with an index. We don't think that's playing it safe, actually. We don't, because there is so much innovation. If you talk about robotics, energy storage, artificial intelligence, blockchain technology, multi-omic sequencing, we have never seen this kind of innovation before. And what is the other side of truly disruptive innovation? Is creative destruction. Sure. So I think this seeking safety in indexes is not going to end well. In the late 90s, what happened? We had the internet and everybody said, oh my gosh, where's this going? This is going to the moon, right? Too much capital chased too few opportunities too soon, and it ended badly, right? It ended badly. What we're going through right now is the opposite of that. We've got everyone hugging benchmarks. They're running for the hills. They're scared of long-duration, volatile strategies. They seem risky because innovation is it's controversial. These ETFs are not like traditional ETFs in that you're dealing with underlying assets that fork and halve, and there are airdrops. So it's not like the traditional equity or bond ETF. As both institutions and individual investors and advisors and asset allocators are doing their homework, the light bulb is going on. And basically they're saying, again, they're beginning to understand that, wait a minute, this is nothing but the internet financial system rolling out. This is a big idea. And it's Bitcoin, of course, but then there are smart contracts, DeFi, decentralized finance. We're starting to use this term internet financial system. It doesn't sound as defiant.
Okay.
It's just technology, at work, and actually making up for lost time. The early developers were in the 80s and the early 90s. Again, they didn't conceive of commerce or financial services. Now we need to catch up. The pent-up demand has been in a lot of places. Retail, it has been there because, as I mentioned, people don't want to deal with wallets and hardware and all of the friction that you have to go through to self-custody. And then on the institutional side, the SEC gave Bitcoin the green light, and so institutions understand this is a new asset class. They have been studying it, and I'll tell you why they've been studying it. In 2018, Cambridge Associate, which is a consultant to endowments and foundations, it came out with a study and basically said, you may not like this, but you better study it because this could be a new asset class, and we truly believe it. It is a new asset class, which means that any institution who is looking for low correlations of returns among their assets needs to look at Bitcoin and other crypto assets if they want to increase their return per unit of risk. Many people are beginning to understand the scarcity value associated with Bitcoin and other crypto assets, and there's something really interesting happening in the world today that is macro, that people aren't connecting directly, but I think they will. In fact, they're not even talking about this. In Nigeria, in June of last year, the government let the Naira, local currency, float. It's a new administration, let it float. It's an oil-rich country. We can support it. Guess what? It's lost 2/3 of its value, and the government is now detaining 2 people from Binance and is insisting, that they need to learn who has been manipulating the Naira with Bitcoin, which we don't believe that's what's going on. What we believe is there is a flight to safety. And we saw this with the regional bank crisis last year. And we had NYCB recently, again, a reverberation of the regional bank crisis. That is also macro. The deposits system-wide are still going down. The problem has not gone away. Bitcoin is an insurance party against counterparty risk. Banks have counterparty risk. Bitcoin does not. And it is an insurance policy to preserve purchasing power and wealth, right? So I think that's happening in Nigeria. I think there's an insurance policy here against, wait a minute, I don't understand, the banking system is still showing deposit outflows. Maybe I should have a little insurance policy because I don't understand that. So let's go back to what it is. Is it a risk-on asset that acts like everything else? During some markets, yes, it is right up there with stocks and bonds in some cases. But the important thing we've learned in the past year, and this is where the low correlation comes into view, is that during the regional bank crisis, it was a risk-off asset. You'll notice the regional banks keep going down. Look at the chart, and look, just actually, the chart since then helps make the point I'm making. It has gone straight up. Where have regional banks gone? Bitcoin led, maybe by a few days, but Bitcoin took off because I remember saying during the regional, I said, wait a minute, Bitcoin's going up. What's going on here? And I can tell you when we also saw this. When we first gained exposure to Bitcoin at $250 versus the $73,000, $74,000 now, and we believe the journey's just begun. When we took our first exposure, we were on edge every day trying to figure out, okay, how will this behave? And when Greece threatened to leave the European Union, and we got fear again in the euro of reverberation of the European sovereign debt crisis, Bitcoin went up. Bitcoin up on those days.
So there's Cathie Wood on why Bitcoin is set to outperform gold after the halving. As Cathie said, the journey has just begun. Bitcoin's success now is certainly not the end of this revolutionary asset. Unlike gold, whose supply can increase in response to rising prices through increased mining activity, Bitcoin's supply growth remains fixed and unaffected by price movement. Therefore, the reduction in Bitcoin's supply growth rate, coupled with its finite supply cap, means that Bitcoin will only become more increasingly scarce over time. This scarcity will drive up demand and prices like crazy, leading to Bitcoin outperforming gold as a store of value and investable asset. Before we go, a quick reminder for those who are keen on staying updated in the fast-paced world of crypto and Bitcoin. Consider subscribing to our daily 5-minute crypto newsletter to stay updated with the latest expert predictions, breaking news, and top on-chain analysis trusted by over 50,000 subscribers for insightful crypto investment information. The link is the first one in the description. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.